and also the acquisition cost. Itu okay. They disclose selling price of the acquisition cost and also plus agreed profit. This is disclose. It's a pair. So the buyer and the seller knows what. And they must disclose the cost of goods to the buyer. So they inform cost of goods, selling price, and also the profit. Okay. We say the accounting standard 102. Accounting standard. Okay. Murabaha can be made in cash, can be installment, cash fees directly, buy directly, and can be installments, and then they can also defer murabaha, defer murabaha means they pay later, defer murabaha, they can be made, they pay installments after the goods are received. Installment will be 3 times every month. This is what they use widely practice, and they can also pay the time later date applied to financing customer characteristic seasonal income, where the customer based on the customer seasonal income. For example, farmer, farmer they receive money when they harvest, harvest. If they are rice, maybe every 3 months or 4 months. But if they are durian, example, every year. So that's the best. You can make the arrangement. Okay. Now, pillars of murabaha transaction. In Islam, you should follow the pillars of transaction. You should follow the pillar rukun transaction. They must know clear about transactor, who are the transactor. They must meet the requirement, and they should be clear about the object of the contract, and then they must have the ijab qabul. Should meet these 3 aspects. Okay. In terms of transactor, there's a seller, there's a buyer. Back in this case is the seller. Bank sell the product, and then the customer buy, and this is one way of the payment profit. Sell the product. They don't lending money, but sell the product because they make the profit. The profit. And then they have the murabaha, the contract. Items are traded. The object is item to sell. Can be car, motorcycle, laptop, handphone, house, that can be for the murabaha. If you want to sell house, the house should be already built. The house should be already built. This you have murabaha. If the house is already built, you can use murabaha. There's another contract selling. We call it as ijara. Istisna. Istisna. Istisna is you're selling product, but the product is not made yet. It's not existing. But you can make the selling, but then you have to build first, and then you sell. This is There's for the selling. But for murabaha, the product is already there. So you just sell it. Okay. Now, items are traded. There's an object. You should specify what the items and what the price of the goods. There's the object, the price, and also the items of the object. This characteristic object should be here. And the ijab, you must have the statement of the will of each part. One party sell, one party buy. This one. Okay. Now, there are some additional information about transactor. Transactor, those who are involved in transaction, transactor. First, yeah, they're allowed to ask, the seller allowed to ask for down payment, uang muka, yeah. So it is allowed. For example, the price of the car, 100 million. Then the bank required to have the down payment, for example, 30%, 30 million. So the buyer should provide money 30 million first as a down payment. Yeah, the seller is allowed to ask why. Yeah, there are many purposes for the one. Some purpose is that they have that to see the ability of the buyer. Do they have money or not? So if there are no down payment, maybe they don't have money, but they just buy this, then they cannot pay. Yeah. So having down payment, it means the person has some money, but they just need to know to complete it. Yeah. So this is down payment. And then it is a lot also, yeah. The bank asks customer to provide collateral, jaminan, yeah, jaminan for their business, kept by bank. In case of they can pay, yeah, then the collateral will be solved and the money to pay for the rest of the money. Yeah. So they ask for collateral. Okay. And also another issue, yeah, in the transaction, yeah, the banks is allowed to apply sanction, yeah, penalty if the customer late in payment. Supposed to be, yeah, late to pay, but then they don't pay. In fact, they have ability to pay, yeah. So have sanction. But this one, the penalty, yeah, is not allowed to be owned by the bank. Yeah. So it is not the revenue to the bank. Yeah. The penalty will be put as a social money. Yeah. We call it in the dana kebajikan, the benevolent fund. If you receive money, the bank receive money as a revenue, they will put in the segment of profit and loss. Yeah. Segment. Yeah. But then if it's for the dana kebajikan, like this one, it is put in the liability, different thing. Yeah. Okay. It is why in Islam, if you put penalty, there will be reward. If you own penalty, there's reward. Yeah, but this one, the money goes to the system. The purpose is to make sure the customer obey the contract, and also they have to the priority to pay. Yeah. If there is no response, maybe they just postpone payment. Yeah, this is to protect the payments. Okay. Now, but time also, yeah, if you tell them sorry, next month I cannot pay, to pay the one after, you can ask for the one. This my experience before when I have about my house. And at the time I have to pay for my get some money for paying my daughter go to the school. Yes, starting the school, pay all the money. So the money goes to the school, and then the next month I pay double. So not flexible. Yeah. Yeah, under conventional bank, you are bank, you get the automatically you get penalty and you get more interest rate. Yeah, so this conventional. Okay, okay, murabah contract, and you have transactions. Transaction can be by order, by no order. Dengan pesanan atau tanpa pesanan. No order means that yeah, the bank provide, yeah, the bank in the bank already provide car, motorcycles, yeah, already there, like the shop, yeah. They already then people will choose to buy this with no order. But murabah by order, it means bank will provide the info, the laptop when the customer order wants to buy. So there's two types of murabah, with order or without order. Okay. Okay. So now murabah by order, there are two alternatives: binding or non-binding. Okay, yeah. Okay. Murabah by order, yeah, already ordered to the bank what products they want to buy, and there are two alternatives: binding or non-binding. Binding means that the person who ordered, yeah, they should buy it, yeah, they should pay. They cannot escape, yeah. If they cancel, yeah, oh, I cancel to buy that, they can be charged, yeah, they can be charged. Jadi kalau mereka beli sesuatu, ya, terus kemudian daksan, kemudian akadnya binding, ya, terikat, ya, and then you cancel, the bank will charge you for the loss the bank made, ya. So this is right. But then non-binding, if the order, then you cancel, it's okay, ya. So there may be question. Okay, it is what bank usually practice with the binding. Now, what about the mechanism for murabah? Yeah. First, there's negotiation between bank and the seller and customer with the buyer. What do they negotiate? They negotiate everything, yeah, related to for the contract. First, what is the item we want to buy? Second, how much the cost of good of the price of the product, yeah, and how much the price, yeah, the selling price. And then they make agreement how long the duration, 1 year, 2 years, 3 years, and how will they pay every month, yeah, and how much. They should make it clear in the negotiation, yeah. Now, then they enter to the contract. Yeah, after they make agreement, enter the contract. Having the contract, then the bank buy the goods to the supplier. This is murabah. Yeah. So the bank is only, yeah, they buy the goods to the customer or the supplier, and then they can ask supplier to send the goods to the customer. Yeah. And then the supplier send document to the bank as an evidence that they will be submit the good to the customer. Then customer pay. So this is the mechanism of. Until now, any question? Can you understand what? You have any idea? Again, thank you for the icons. Setting. Okay. Now we move. Yeah. Next. Okay. Now we go with the case. Yeah. Attention, please. Okay. Is the case, yeah, technical calculation and journal of the work process. Right? Now, case murabah financial transaction. Let's say January 5, yeah, PTN negotiated with Bank Indonesia to obtain murabah facilities with an order. So, hanya order, yeah, to buy car, yeah, with the following plans, yeah, they should agree the price of the car 100 million, yeah, down payment 10 million, let's say 10% of the item price, yeah, let's say 10 million, okay, financing by bank 90 million, so bank finance 90, so down payment is 10, yeah. Now for this financing 90 million, bank, yeah, agree with the customer to have margin profit for the bank 18 million. Yeah, just like you buy and sell, right? Yeah, that's like that also. Yeah, and then so the selling price is the 100 million plus margin 80 million, 118 million. Yeah, but the this one selling price, the price of gold plus margin. Duration 24 months. So installment 21 or 25 4 months. Yeah. And bank allowed to take the administration fee, yeah, at the beginning on any as long as there's for the contract. Yeah. This administration fee to some extent still some debatable. Some say that it's not a lot, some say that basically it's allowed to take the administration fee. But how much this difference is? Yeah. The fatwa say administration fee is as much as you spend for the going to the contract. Yeah. But in this case, then the bank put 1%. One issue why 1% here, the reason is because of you remember last time the collectivity, comes. This is because this is chat here, maybe. Attendance. We test chat. Remember last time collectivity? If the collectivity for the collectivity one, current lancar, no debt, bank should make the 1% of the allowance. So that's the reason of the bank use 1%. Uncertainty, because at the time when the contract bank already put as expense 1% as allowance. Okay, so this now we I will say for the Islamic microfinance, the WMBA, because WMBA Islamic microfinance is not under the regulation of OJK authority. So in the Islamic microfinance, we don't put this uncertainty, because we are not fall under the regulation. But the bank usually charge 1% of this one because of the regulation. Should allocate 1% as the allowance. Okay. Okay. Now, let's say now calculation. Now, you have done. First, you must have some calculation. You have to calculate installments per month. See how much total accounts receivable minus then point down payment divided by number of payment months. So before total account receivable is 180 million. The whole price, including down payments. Minus down payment 10 million. Divided by number of months 24. So you have the installment is 4.5 million. So now to move it. Cannot do much, Okay. Okay, this one. So this one you have to calculate how much their monthly income. You can follow? Can you follow? Okay. Next, Okay. Next, we calculate how much the margin. Margin, the income, recognized at maturity, installment payments. For the margin, there are two approaches. First, you use the annuity approach. The second one, you use proportional approach. Annuity approach, the margin at the beginning is high because you based on the how much the total principal of utang. So the margin is high at the beginning, but at the end, it's very little because the principal is little. Like you calculate the annuity. Have you ever studied on calculation the annuity table? Statistic annuitas. Have you experience? Annuity table. Okay, this is the table. And another one is proportional approach. It's recommended by standard 02, recommended proportional approach. The number of receivable is the same. Number of the margin is the same. This month and the next month is the same. This is proportional. We will discuss this. Okay, now we got how we calculate the Now say you use the proportional approach. Yeah. The second approach for calculating margin. Now, we calculate profit percentage. Yeah. Total margin. Yeah. Minus divided by cost of acquisition of assets. Yeah. Outside down payment. So this is your margin, and this is your bank financing 90 million. Yeah, and you get 20%. This is calculation percentage from the comparison margin with cost. You get 20% margin. And the second way you calculate, yeah, but margin you calculate based on the total margin divided by net receivable. Net receivable is the total price 118 million minus down payment, so 180. This one profit percentage 16.60. Yeah. Okay. Okay. Now, this is proportional. After you calculate the margin, yeah, margin per month, you get 16.66. Then you find the amount 16.666 times installment per month 4.5 million. Then you get 750,000. This is margin per month. This is how you calculate margin. Yeah, and then yeah, this from this number, then you can calculate how much the principal per month, principal pokok. Yeah, the installment per month is 4.5 million. Deducted with the margin per month, 750,000 is equal. Then your principal per month is 3.75. So this one, yeah, remember you have to pay the installment 4.5 million. Yeah, this 4.5 million consists of margin and also principal. So every time you pay the principal, installment, that consists of the margin and also the principal. Using the proportional, yeah, based on this calculation, margin per month 700,000, principal per month that you every installment is 3.75. So this is the calculation. Then we can make a table, yeah, monthly installment, yeah, and then this principal and then this margin. So every time you pay 4.5 million, consists of your already paid principal 3.75 million, and then you pay the margin 7. So that one. So now you pay for the one until 24 months. You can make this table 4 months, and total, yeah, you pay 108 million, and then the principal is 90 million, and the margin is 18 million. Yeah. Cannot do much in this one. Yeah. Okay. So this is you provide this table. Yeah. So that's why then the customer will pay. Yeah. They pay. Yeah. Every 10th of February, they pay for fine. Then the report that we send the principal, we send the money. This is it. Okay. Now, welcome. Now, why is the murabba accounting? Yeah. During negotiation, there's no any jurah. Yeah. And then how about down payment? Yeah. Down payment, you can have some mechanism, direct debiting, agree down payment, debit, then you pay to the supplier. Yeah. And then block the customer account, then you pay later. Yeah. Down payment help paid by the customer, and also, so the customer doesn't give the money to the bank for the down payment. They pay directly to the supplier. Can be like myself last time, the car, the down payment they pay directly to the car seller, the car, the supplier. Can be. Okay, now down payment, let's say for down payment, first accounting down payment, yeah, debit the customer account for the down payment. Yeah, down payment, the customer give the money to the bank. So yeah, they could be cash or saving account, customer account. Yeah, 10 million example. There are about money, so this is second customer account, and this is as down payment. This we record when we say down payment, it will say directly. Yeah. Okay. And then yeah, and then we pay. We buy the asset to the supplier. Yeah. And then asset to supplier. When buy the asset to supplier, debit murabah asset inventory 100 million and credit cash supplier account 100 million. So this is buy because the Sharia way is the bank sell the product that they already have it. So that's why bank buy the product, then they sell it. So this one, the bank buy. So bank have the assets. Okay? Different from the conventional bank. No person don't care about the assets. Just to get the money, 100 million, let's say, then you have to pay 110 million for 10 months or 1 year. This is it. But Islamic bank different. Islamic bank they must have underlying transaction in making profit. They don't have profit because of lending money. They have profit because selling, investment, etc. Okay. Okay. Now, let's say some bank that just puts on credit. Yeah. Before, for example, declaration, the bank buy cash. What if the bank buy credit from the supplier? Debit murabah as inventory, credit payable to the suppliers. Then after that, the bank pay. Account payable and then cash. You can do. Yeah. So this. Okay. Now, what happens if the murabah contract is cancelled? Yeah. They just at the beginning, but they cancel. They order, but they cancel. Yeah. For example, we want to buy a car, and after that, only we cancel to buy the car for next year. In fact, bank already buy the car, for example. Yeah. Now, in this case, yeah, if they use the what we say with the hopefully this. Okay. Okay. They only give down payment 10 million, example. And then bank, have already ordered the car. But then the car, because they cancel, bank has to pay something to the customer, to the supplier. Yeah. This one, let's say, the loss from the bank was cancelled is, let's say, 1 million, because bank already have some expenditure. This expenditure, is paid by the customer. Customer. If they use the binding murabah, something that they have to buy. So they want the 10 million as the down payment, to the bank. Bank do not give the 10 million, but they just give 9 million. The other 1 million is the income for the bank, because the bank have incurred some cost. And maybe bank has to pay the supplier to give it back the car. So this is bank can ask and charge for the cancellation. So basically. Okay, the next step, okay. Now what when the murabah contract is agreed, we come before murabah is cancelled. Now let's say murabah contract is agreed. Now when you sign the murabah contract, And then there are some journal review. First, journal for Murabah sell. That you sell, yeah, Murabah. The second journal, recognition of down payment as a paying of the Murabah. That's the down payment, and that's, yeah, to pay off the Murabah. Yeah. And then the third one, recognition of administrative income of other residents. Yeah. Say this three journal will you make at the time of you sign the contract. Yeah. Let's say now the Murabah, yeah, is agreed. The price 180 million. You put debit Murabah recital 180 debit. Yeah. And then the cost of the goods is 100 million. You put as Murabah asset inventory 100 million. You know before you buy the Murabah asset? See, you buy Murabah asset here 100 million. Then if the Murabah is agreed, this is the debit become credit. Okay? Yeah. Now, okay. It's time. Now, yeah, Murabah asset become credit. So why? Because the goods now you give it to the customer. It's not in the asset of the bank anymore. It's a customer asset. Bank asset now becomes Murabah asset. Okay. The difference, you call it as deferred Murabah margin, 18 million. Yeah. You don't call it as a margin directly, but you call it deferred Murabah margin. Why deferred? Because the margin, yeah, you will, yeah, record as a margin, yeah, when or the time due. Yeah, you see the table for February, yeah, 10, and then there is margin 750 million, 750,000, and then March 750,000. So the margin they record when the due date, yeah, not at the time of the contract. So you call it as deferred, ditunda, yeah, ditangguhkan, margin Murabah ditangguhkan. So you don't record. This one, it does not go to the income statement. Yeah, it goes to the asset. Yeah, this one in the asset, balance sheet. Yeah, financial position 180 million, and this one deduct this one in the income in the balance sheet. 150 million minus 18 million, so just 100 million. Yeah, so I will show you later when about the presentation. Now you record as the down payment is a paying off Murabah. So you have before down payment 10 million, you debit down payment before you put it in credit. Now you put debit. Yeah, so down payment now zero, the balance. And then this down payment becomes deduction for the Murabah receipt. Yeah, so you have for the Murabah 118 in the financial position minus 18 million, so 100 million, yeah, deduct minus 10 million, yeah. Minus 10 million. So your balance for the Murabah, yeah, reciprocal is 90 millions. Yeah, so this in the balance sheet, so like it, yeah. Okay, now then you record expense, yeah, for the day of the contract. The third type of the journal that you make, yeah, expense by the customer. What are the expense? Administration expense. Let's say this 900 million, yeah, sorry, 900,000, and then stamp expense, yeah, yeah, notary expense for the legal, you pay for the legal, you put it on, yeah, this is what in practice, yeah, life insurance expense, for example, 278 million, Yeah, if they have the one, they put it. So what do we record? How do we record this one? Make a journal. Yeah, total 1,530,000. Say, consists of, yeah, administration income. Yeah, for the bank it is income. For the customer, expense. Yeah, so administrative expense for the customer, but for the bank is administration income. Yeah, okay. Yeah, and then yeah, for example, you yourself you pay administration costs for the registered as a member of the library. For the library, there's administration income or revenue. Right? Then the spend supplies, the 20,000, notary account 200 for the legal. Yeah, every transaction they used to go to their notary. Yeah, and then insurance company account 378,000. So you put this in the credit. Until the end, can you follow? Can you understand or you don't understand? Can you understand? Can you follow? What? Okay, yeah. Oh, yeah, okay. Now, we move. Yeah. The next, you record transaction for the installment payments and the commission of murabah. Yeah. Now go to this. See here. This is they're supposed to pay for 24 months. Yeah. But I make it simple, only within 5 months. Yeah, to make it simple. Month 1, yeah, they pay the due date 10 of February, yeah, and they pay 10 of February. How much they pay? 4.5 million. They should pay 4.5 million. Principal 3.75, margin 750,000. The amount paid 4.5 million. So the amount paid with the amount supposed to pay is the same. Yeah, it's the same. Month 1, month 2, yeah, supposed to be 4.5 million, and they pay for 4.5 million. That's correct. But there's difference. Supposed to pay 10 of March, but they pay 20 of March. Yeah, they pay 20 of March. Okay. Now, I don't know whether you can see the one. Okay. You can see the. Can you see the one? In the no. The light. Here you can see. Okay, I come in here. Now, the date of the payment is different. Yeah, this one is on time. This one late. Yeah, okay. Yeah, 10 days late. Yeah, why I put here? Because before there is possibility the bank charge for their penalty or something. Yeah, let's say. Okay. 1.3 says April. Yeah. On the due date 10 of April, they paid 2 million. Supposed to be 4.5, but just 2 million. Yeah. And then the rest, they pay 15 of April. So there will be different journal. So I make it this one to show you the difference. Yeah. And then month 4, 10 of May, supposed to be 4.5. But yeah, they pay 4.5 million. And the 30th of May, very late. And this one, yeah, they charge penalty. Denda is yeah, penalty, charge penalty. This one late, but no penalty. Yeah, no penalty. Okay. And then this one, yeah, June, 10 of June, yeah, supposed to be 4.5 million, but you pay yearly payment, yearly fully payment. Yeah. And this one, yeah. Okay. Okay. 90 million. The yearly payment is 90 million. Because this one what you pay, yeah, 4.5, 9 million, and then plus this one 9 million, so 18 million, so plus 90, there will be 108 million. So all of them 108 million, yeah. Then they pay all of them minus this one. There will be different number. Okay. Can you understand the difference this one? Okay, now we go to see the journal. Yeah. Okay. Now, in February, yeah, it should pay 4.5 and they pay 4.5. It is the normal one. Yeah. Where's the journal? You put in the journal, debit cash or customer account 4.5 million. You credit Muraba receivable 4.5. Because the payment is to deduct the Muraba. Okay, the receivable. Now what happened there? Yeah, you have another pair of journal. There are two pairs of journal. Another pair is you record about the different Muraba margin. You remember that Muraba margin, when you have the signed contract, you have different Muraba margin. Yeah, that goes to the balance sheet. Yeah, financial equation. Now, because already today you debit for different Muraba margin, and the status now become Muraba margin income. 750. This can go now to the income statement. Yeah, you have Muraba margin income statement. Yeah, and this money, because we pay by cash, this money by the bank, some will be owned by bank, some others will be given to the customer who puts the money in the bank. Remember last time we discussed, we put the money in deposit, in the checking account, yeah, in the saving, yeah, and under Muraba. So bank should be profit sharing to the customer who put the money. Yeah. Okay, so this is the journal for this one. And next, yeah, payment after due date without being penalty. Second one, yeah, without being penalty. Now, it's not easy. Okay. I don't know how to the stock screen will be kind of screen. Not a problem. Yeah. Now let's say, yeah. This one on the 10th of March, yeah, due date, you record. Yeah, they don't pay end of the March. Yeah, because they pay on the other day. Yeah, March 20. Now, 10 of March, you still put the journal. What journal? Yeah, you change the status. Muraba receivable. Yeah, credit, deduct, and then you put Muraba receivable due. Just tempo. Yeah, the receivable that's only 2. Yeah. 4.5. Okay, that means that now you have receivable, yeah, but 2 already 2, yeah. And then defect Muraba margin you debit 750,000, and then you credit margin Muraba margin income accrual, yeah. Although you don't receive the money, yeah, this deferred, yeah, is deduct, debit is deduct. And then here credit Muraba margin income accrual. Yeah. Why accrual? Yeah, hello. This is accrual because at the due date, the bank does not respect the money. Yeah, does not respect the money. This one, yeah, goes to the income statement, but this money cannot be set with the customer put the money in the bank, yeah, because it's not in terms of cash. It's an income in accrual, not in cash. Jadi belum bisa dibagi hasil, ya. It cannot be said with that because every, yeah, in Islamic bank, every time you make profit, you share with your customer and put the money in it because you use their money. Yeah, so this is okay. You pay attention to this. Okay. Now, on 20th of March, yeah, 20th of March, when the customer pay cash, debit cash or debit customer account, 4.5 million. Yeah? And then you credit Muraba receivable due. Yeah? One due, import the status now, you delete the status, you credit, and the final status is this one. Yeah? No more is deducted, and then you have the cash. Yeah. And then the status of the Muraba margin income accrual before is you debit, so it's go now, and become the final status Muraba margin income 750,000. So this is your final status. Yeah. This 750,000, go to the income statement. And also go for the profit and loss sharing with the customer. Yeah, report profit and loss sharing report. Yeah, laporan, distribution, income distribution. Laporan distribusi dah. Okay. Okay, until here, can you follow? You confused? Okay, this stage, the second part of the payment, they are late but no penalty. The third type of payment is partly payment, partly on due, partly they pay on the due date, and then after that some they pay after. This is the third type. And no penalty. Let's see here. 10 of April, they pay 2 million. In fact, it should pay 4.5. The other 1.5, this Muraba receivable due. So that's how it. Can you follow? What happened to the margin? The deferred margin, you debit all of that because already due. Now the one that's you have in terms of cash now become Muraba margin income. How much? This one in total is 750. But some, you pay in cash, some still in accrual. So you have to define this. This one, goes to the income statement, and you can share with the customer who deposit the money in the bank. Yang nabung. This one only income statement. How we calculate this? Remember before you have the profit percentage is 16.66. You calculated before. Multiply with the installments paid. The one you pay cash 2 million. So the one 333,000. So this one. And this one is a okay. So how to calculate this? The different margin is 750,000. Minus the one that you calculate the margin, they already paid 333. 333, and then you get 460,000. So this one you okay? You have it? Okay. Have you got this file? Have you sent the file to the participants? You can send the file, Yes. Already. Oh, you get it. Now, there's now when the customer, they still have to pay 2.5 million. On 15th of April, they pay 2.5 million. Debit the account. Customer account money, debit. Credit Muraba receivable 2.5. And then when they only pay the one, Muraba debit pay. Now the accrual becomes cash. So they debit and credit now murabah margin income. This means that the murabah is in terms of cash. The amount. Okay. So this the fell into the third category, the payments. Now, number 4, installment payments made after the due date, and there's penalty. Now after the date, but there's penalty. A bit different from the category 2, type 2, How much the penalty? The penalty, let's say 10% of total accrual, for example, margin income. Okay, we calculate. Now, okay. Now, this one. Okay, that's it. So, 10th of May, this will pay, if you get no payment. No payment, but still report. Why? Because there's the due date. For the murabah, you have to report. You debit murabah receivable 4.5 million, and you credit murabah receivable. So deduct the murabah. Now the status becomes due. And then you record the different murabah margin because already, due date. But the margin become accrual. This goes to the income statement. This one deduct the one in the financial. Now, 30th of May. 30th of May they pay. And they pay, they will cash credit murabah receivable due 4.5. So the status now finished. Follow the receivable. Now the status of accrual, you debit. So no more accrual. Now the status become murabah margin income. This can go to the income statement and also on the distribution of profit sharing. Then now there is the penalty, there is sanction. They have to pay 10% of accrual margin, for example. They give an 10% times 750 million. Then it's 75 million. How did you learn? Debit cash for customer account 75 million. And credit benevolence fund account 75,000. This one, you put it in the liability, not the income statement. Benevolence fund account in the liability. No liability, the bank financial position. Okay. This one asset. Liability, what is liability? What is liability? They need to do things, So we don't need to try here. The liability is there. We can say benevolence, finance, fund, account. This one 775. This Okay. Now we go to category 4. Now category 5. Payment, to pay off yearly repayments. All of them, you pay all of them, you pay all of them, okay. That one is here. Let me just go there. Okay. This one just go here. I think the one go there. Okay. Okay. Now, let's say in the book value, we have 90 million. Consists of principal 75 million and margin 50 million. If you calculate in the book of general ledger, the balance is principal 75 million, the margin 50 million. Okay. Now they pay and they get discount 80% of remaining deferred murabba margin. They say they get discount. Yeah. So how to calculate discount? Murabba margin 50 million, 80%. So they get discount 12 million. Yeah, they get discount 12 million. How to calculate it? Yeah. And then that means murabba income is 3 million. 50 million minus 12 million, 3 million. How to calculate this one? Yeah. Now there are two alternatives for recording this one. 21 discount are given at the time of payment. Yeah. At the time of payment, they get discount. So you don't have to pay 90 million, but they get discount there. Yeah. Now let's say here. Okay. Sorry. Okay. Now you put the discount first. Murabba installment discount 12 million, and then this credit murabba receivable 12 million. So that's how we get this. Okay. The next way, yeah, because you have to pay 90 million and you get discount 12 million. That means how much you have to pay? 78 million. So you pay 78 million and credit murabba receivable 78 million. So that's the difference. Now all murabba receivable finished. Yeah. And then you debit murabba margin, deferred murabba margin 50 million, you debit, and you credit murabba margin income 50 million. Yeah. Now you have here murabba margin income 50 million. This does not mean that this goes to the income statement 50 million, but you don't share to the your customer deposit for murabba deposit. This 50 million, no. But what you share, everybody has it in your nabo, yeah, with the depositor. 15 million minus this discount. Yeah. So there will be 3 million. So only 3 million, yeah, that you share will be bank and then the customer who put the money in the bank. Yeah, not this 15 million, but then the person will be this. Yeah, so that's the way. Yeah. This one, there are two alternative two for the payment. Discounts given after the payment. You pay first. You pay 90 million. Murabba receivable 90 million. And then if murabba margin 50 million, murabba margin come 50 million. After that, then the bank give the money to the customer. Payment discount 12 million and cash, yeah, customer 12 million. So this is the way. Yeah. So the first way is they deduct directly and just pay 78 million. For this one, pay 90 million and then give back 12 million. So there's two ways. Two alternatives. Okay, that's for the recognition and measure. Any question? Before we go to the presentation and also the discussion. Can you understand? Okay, now we go to the presentation of murabba transaction. Yeah. Now I just show you in the sorry. Okay. Now this one, yeah. This is income. This is the financial position of PT Bank Syariah Indonesia, BSI before Bank BRIS, Bank BSI, BSM, Now, let's see the murabba. What do they put the murabba? It's cash. Murabba here in receivable. Is the presentation they put in the receivable murabah. And then they have third party, as mentioned before, third party from outside. And And then related party is the bank. Yeah, that's yeah. Yeah, third party, yeah, is the bank still relation with the bank. For example, the family, the parents, or the son, the daughter borrow of the CEO, yeah, and they borrow the money, and this one put at the related party, or the subsidiary of the bank, anak perusahaannya, they borrow, then put the related. Okay, why the differentiate? Because they want to see the risk. The higher you put the money in the related party, there's high risk. Yeah, high risk people borrow to your brother and sister. High risk they don't pay. Yeah, but from other people they will pay. Yeah, so this is in the case. But so people get exposed, understand how risk is the bank. Yeah. Okay, this for the where do they put the, where do they put the, let's say, deferred margin? Deferred margin should be inside this one. This one already total murabah minus deferred margin. Yeah, already here, but then they don't put in detail about this. Yeah, so it's already in here actually. Another issue on the murabah is we go to the presentation on the statement of financial, income statement. Okay, income statement. Okay. They have revenue from as a bank, as a mudarib. Income from sales and purchase. So this, yeah, murabah includes in here. Yeah, as mentioned before, for sale transaction, there's murabaha, there's istisna, there's also salam, actually another one. But salam usually people don't practice it in Indonesia. So they put it here for the income statement. Okay. This for the presentation, the effect of the one. And now, how about the, yeah, disclosure? Now, disclosure. We go to disclosure. Okay. This one. Yeah. Revenue from fund management. Yeah, murabah and istisna. Yeah, is murabah istisna for here. Okay. Okay. Go to the disclosure. Because in accounting, you have 4 aspects in accounting: recognition, measurement, presentation, and also, and last one is a disclosure. Yeah, we have recording is about recognition and measurement. Yeah, and then final report is about presentation. Now this one. This one, yeah. See. Okay, this one is murabah sales. Yeah, you should disclose about the collectibility of murabah. Is it current, special mention, substandard, doubtful, or loss? Yeah, yesterday I already explained. Yeah, current is, yeah, no late in payment. Yeah, just current, and you put the allowance 1%. Special mention, you are late for 3 months. Yeah, and then from day one until 90 days, and you have to pay. Your allowance is 5%. Substandard 15%. Doubtful 50%. Loss, yeah, bad debt is 100% allowance. Yeah, so this you disclose. You have to disclose this one, and then you disclose in terms of the currency. yeah, how much the foreign currency, yeah, how much, yeah, that you have the current and special mention substandard, you have to disclose it, yeah. Another one that you disclose, yeah, a second, yeah, revenue for murabah. This one you make more detail. How much your revenue from murabah? Yeah, because from sales there's murabah, then istisna. You disclose about murabah and istisna because before you just combine it. Yeah. Okay, how much murabah receivable? I think there's already all of them here. No, not this one. This one about the, you have to disclose about the quality of the asset. Yeah. When the due date within 3 days, 30 days, yeah, within 60 days, 90 days, how much there will be a due date of the murabah. I think there's a sort of things that you have to about on the disclosure of the murabah. And the murabah from Jakarta, the area, Java, Sumatra, Kalimantan, you have to disclose. This is what is stated in the regulations. Yeah. So a lot of things that, yeah. And then, yeah, murabah, that's, yeah, what is it? The industry, from which industry that you have. Yeah. Okay, I think that's all the presentation for the murabah. Yeah. Any question? If you question and answer. We've done accounting, all of that. We've done the, you understand the definition, you understand measurement, you, when you record, you understand measurement, how much you have to record, like your calculation report. And then what do you report? Is that in the financial position, keuangan, yeah, komposisi keuangan, or in the income statement? You know what the report, that's the counting, and then you disclose, make some more information about the. Okay, any questions? Come with the question and answers. Hello? Yes. Yeah.
Okay, in case the customer couldn't pay for more than a year,
Yeah.
what would the bank do?
First, yeah, if that already comes more than 6 months, yeah, then the bank will put the allowance, yeah, 100%, because that category is that we discussed, yeah. Now, yeah, don't wait until 1 year, 6 months already comes back to spend. Having that bad debts, there will be not good for bank. Why? Because the income statement, yeah, the bank should put as an expense. Yeah, all the principals, money the bank have the customer, that's considered as the expense. So they will reduce bank's profit. That's not good for the bank. Huh? And then if the customer really then not able to pay, let's say because of the bankrupt, or they're sick, yeah, or disaster, yeah, because this is the actually all disaster, bank can have the right to ask for the, yeah. Now, there's the other is the bank will sell the collateral, financial collateral. Yeah, collateral can be the asset itself. Can be also that, yeah, something that the customer has. For example, the land, their house, their car. Yeah, this one, the bank can sell it. Yeah, when the bank sell it, let's say, yeah, the acceptable is 50 million, and then the land is 100 million. And then sell 50 million for the bank, and then we give them. So that's the way, yeah.
So the bank has the ability to take you.
Yes, when they have the signed contract, yeah, the customer have the agreement. If they don't pay, then the bank has the right to sell the property. Yeah, that's the way. Okay, good question. Any other question? Any other questions? No? Yeah? If there is some question, we need to know. Maybe. Okay, how we can do that. Okay, Mbak, already 3 o'clock, yeah? Already 3 o'clock? Yeah, I think it's 3 o'clock. Okay. That's all for me, yeah. This much, just review knowledge for the accounting for the selling transaction, which is murabah. Thank you so much. Assalamualaikum warahmatullahi wabarakatuh. Give it to Mbak Amelia.
Okay, thank you, sir.
You're welcome.
Now we're going to the knowledge agenda, which is also. Thank you for Professor Rizal Yaya, Ph.D. for your attractive material. Hopefully, it will help core sales transaction. Now, we're going to the closing. As a master of ceremony, I apologize for everything. Finally, I would like to say thank you. Before leaving this event, please kindly have a word turning on your camera because you want to take the picture.
Okay, turn on camera. The one online, turn on camera, yeah.
Okay. Okay, we can take it. 1, 2, 3. Okay. Once more. 1, 2, 3. Okay. Thank you so much for everyone for joining this event. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh. Photo offline? No. Offline photo, yeah, okay.